Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. I wanted to make my second recommendation, the first being, 10 days ago, the US Cannabis ETF, symbol MSOS, and that is still uh, going nicely. And today I wanted to make a recommendation to buy the iShares China Large Cap ETF. And so today, the Fed said they were not going to uh, make any rate changes, but you could expect maybe three more later this year, which seems a little crazy given where inflation is right now. But again, I want to stick this channel, at least initially, to specific recommendations because I don't see other people doing that very much. So here we go. To gain a perspective on Chinese equities, it's always best as a technical analyst to look at long-term charts first and then work your way down into shorter-term charts, which will give you your entry into the security. But from a long-term perspective, this is the Shanghai Index. For 15 years, uh, Chinese equities have consolidated and with wide swings, but still going sideways, not really making any progress. But there's been great opportunities to benefit during this consolidation, this huge consolidation. So here's our support line, this blue upward sloping trend line. And every time prices have gotten there, it's been a good investment opportunity. And you can see where we are today, right on support. And back last month, I'm sorry, in January, we had a big down month where this red bar or candlestick began at the top. Uh, the highest price was at the beginning of the month, and by the end of the month, it ended right on the support line, the blue support line. And it seemed like there was some throwing in the towel on Chinese equities at this point. Sentiment was really bad. People were just saying, I don't want this anymore, and getting out. In February, we had just the opposite, a huge up month, and it totally engulfed the prior month price action, and that gave us what's called a bullish engulfing pattern, which is a reversal pattern, in this case, from down to up. So this is a monthly chart. So each one of these bars represents, or candlesticks represents, a month of price action. So you can see one of the benefits of buying right on support like this is if you have a clear-cut exit strategy. If I was to buy China up here, where would I throw in the towel? Way down here? No, I wouldn't want that situation. So when we buy on support, we know if it breaks cleanly that we're going to get out, put our tail between our legs, take a small loss, and move on to something else. So we know we have an exit strategy, and the potential upside would be up here to resistance, which is very huge. This is on a long-term basis. And as a market technician, we're trying to identify new trends at an early stage and then stay with those trends until they change. And, we're attempting to do the same with the cannabis ETF, which had been in a downtrend for 5 years or something, or 3 years. I don't, anyway, it had lost 80% of its value. So here we go. One of the things that a contrarian, so in our toolbox, we have pattern recognition, like the big triangle that we just, a 15-year triangle that we looked at. We also have sentiment indicators, things in our toolbox that it's just one tool. They're contrarian signals. When everybody's saying something over and over again, usually you're towards the later innings of that particular move. In this case, a bearish move where the pessimism is so high, and the economists on their front cover in February had this on China, which is very negative. And I think it was 3 weeks ago on 60 Minutes, I happened to see uh, a very negative show on China and their economy. And so these are contrarian indicators. A market technician, his last name was Montgomery, 30 or 40 years ago, did studies on magazine covers and, did they mark the bottom in this case where pessimism was high, or did they mark market tops and when people were really euphoric? So there is something to that. So these are pointing to maybe over pessimistic views on the Chinese economy and stock market. Let's look at point and figure. For the cannabis ETF, I talked about, we had a bullish price projection of 19. We don't have any bullish price projection here on FXI. We don't have a bullish trend line. Uh, we don't. So this is telling me, I'm giving you some perspective that this is in the infancy of a possible move in Chinese equities. And again, we're trying to identify new trends at an early stage and stay with those trends until they change. So I just wanted to, again, give you kind of a visual concept. We're bottom fishing here, which uh, but we have some things to hang our hat on here that suggests, at least in the short term, higher prices if it's not a multi-year advance, which I think it is. So this is the last 3 years of the Chinese equity market and our FXI, the Chinese large cap ETF. And you can see the bearish channel, you can see the down move, you can see prices have gone from 50 to a low of 20. That is, what is that? 5, 10, 15, 20, 50% decline. So I thought this was interesting back in 2022 because another tool we have in our trustee toolbox, and again, we're on an intermediate term outlook here. The triangle is a long, long, long term. Now we're down to intermediate term. And what I thought was bullish here was that we had a 5-wave advance according to the Elliott wave theory, which believes that when you see a 5-wave advance, that means the trend possibly could have changed from down to up. And so we got our 5-wave advance, which I think was the top of wave one. And now we've had an A, B, C decline. Retracements go in waves of 3. And it's possible that this is the bottom of our wave 2. As long as it stays above the bottom of wave 1, it fits the parameters of the Elliott wave theory. And if this is right, then we're entering our third wave. And one thing, third waves are exciting. They move fast, furious. They're the most profitable, etc. So, next hurdle is to get out of this bearish channel. And I see China's up a little bit today, but not much, about less than 0.5%. So that's what this chart is suggesting to us. Now we're going to, but where do we get in? We're going to buy here at 24 and have downside to below 20. Where do I get out of this if I'm wrong? So, that's too much risk for me. And there's no reward because we don't really have a bullish pattern to hang our hat on. So I go down to the daily chart, which is about a 6-month chart, and we're going to take a look at this. And here we are. We've got a bullish pattern. It's not a giant pattern. It's only a 4-month pattern, but we had our decline and then we have kind of a bottoming process going here on a short-term basis. And we have what's called an inverse head and shoulders pattern, which is a bullish pattern. We got our left shoulder, we got our head, we got our right shoulder, and there's our neckline. It's like a man or woman hanging upside down. We don't want to have any biases here. Just kidding. And so we had a slight breakout. I didn't like to reward the risk at that point, but now we've had a pullback here, and I think it's time to buy this index. And so I like pattern recognition because I know where my reward is and I know where my risk is. So our risk is to the bottom of the right shoulder. If it breaks the right shoulder, low, then this pattern is no longer intact, and that comes in at 23. So it gives us about uh, a it gives us a 4% downside, potential downside. And we got nice support here. We got a little bullish trend line. We got a confluence of moving averages. And so 4% downside, but our upside is 2750. And that price projection is based on our inverse head and shoulders. And we arrive at a price projection by measuring from the bottom of the head to the neckline and projecting that distance upward, and we come up with 27.5. And that would be the beginning of this, hopefully the beginning of this multi-year advance. But regardless, even if that's 14% upside. So even if that's all we get, our reward to risk is 3 to 1. And but I think the potential here could be much greater. So that's my recommendation today. And thank you for watching. Chart Built Wealth, Profitable Investing with Technical Analysis. I'll have some new graphics, and this channel will look better, but I wanted to get this out to you. Thank you and have a great day.